1031 exchange in 3 minutes. In the United States, if you sell a house, you may have to pay capital gain tax. If you bought a house for $200,000 and you sold it for $500,000, there will be a $300,000 gain, and then you have to pay tax. Most people, they have to pay about like 20 to 25%. But if it was a primary house and you lived there for 2 years in the past 5 years, you have some exemption. If you're married, filing tax jointly, each person have $250,000 exemption. Combined, you're gonna have $500,000, which is great. But anything above it, you still have to pay tax. What if it was a rental property? Oh, then you have to pay tax. You always have to pay tax. But a lot of people, they will use 1031 exchange, which means you don't take the profit. You kind of reinvest it into another real estate property. It could be residential, commercial, so it could be like an office, retail space, apartments, mobile park, but as long as you reinvest it, you can have this 1031 exchange, and then you don't have to pay tax. You defer the tax, you pay later. Why do you want to do that? Reason one, inflation. If you have to pay tax, for example, like $60,000 now, you feel like, $60,000, I feel it. What if you have to pay it in 20 years, 30 years? Maybe you don't feel it, right? The reason two, a lot of rich people, they will combine estate planning. They're gonna set up a trust. So they just don't pay tax at all, because they're just gonna roll everything into that trust and then pass it to their kids.
Wow.
That's rich people. And the most important thing when you do a 1031 exchange is timing. You have 45 days to identify 3 targets, and you have 180 days to complete the transaction. Most people, when they list their house they want to sell, they are already looking for the targets because they want to make sure they have enough time to find the right property and to complete the transaction.